In the year 2014, the Nairobi Securities Exchange became the second bourse in Africa after the Johannesburg Stock Exchange to sell her shares to the public. This allowed the exchange, which was 100% owned by market participants for over 50 years, to open to new shareholders by offering 66 million shares, amounting to 30% of the total issued shares of the bourse. Each share was valued at 9 shillings and 50 cents, raking in a cool 627 million shillings to the market intermediaries. However, the market is headed for another ownership restructuring to reduce the ownership of the market participants, individuals and the public, as well as private companies. Under new guidelines published in the Kenya Gazette, the National Treasury has given all shareholders until the end of this year to adhere to new shareholding structure released by the government. The brokers and investment banks that currently control 59.8% of the exchange cumulatively will have to cede off close to 20% stake to align to the 40% cap allowed by the government. Individual and private companies will not be required to cap their ownership to 5%, while listed entities will be required to own a maximum of 10% of the total issued shares. A statement issued by the boss says shareholders whose ownership exceeds the prescribed limit are required to ensure compliance with the new regulations within 6 months from the date of commencement of the regulations, that is, Friday last week.